Welcome back to the channel. Today we're diving deep into one of the most talked about fintech players of this year, Fiserv Inc., ticker symbol FI on the NYSE. If you follow financial markets closely, you've probably noticed Fiserv's name showing up in multiple institutional investor letters, hedge fund portfolios, and analyst reports. But recently, something interesting happened. Fiserv's stock took a serious hit, even though the company continues to strengthen its position in the financial technology landscape. So in this video, we'll break down exactly what's happening with Fiserv, why big investors still believe in it, what the company's latest earnings reveal, and how it's positioning itself for 2026 and beyond. Grab your coffee and let's get started. This video is for informational purposes only and is not financial advice. Always do your own research or consult a professional before making any investment decisions. In its third quarter 2025 investor letter, Madison Large Cap Fund took a moment to highlight a few key holdings. And one of the standout mentions was Fiserv Inc., NYSE FI. Now, for anyone new here, Fiserv is a global leader in financial technology, offering a wide range of payment and fintech services that help banks, merchants, and consumers handle transactions seamlessly across digital and physical channels. But despite being a major name in the fintech world, Fiserv's recent stock performance hasn't been smooth. In fact, the company reported a one-month return of negative 48.6%. And over the last 52 weeks, its stock value dropped by nearly 70%. By November 10, 2025, Fiserv's stock closed at $63.80 per share, bringing its market capitalization to roughly $34.31 billion. That's a steep decline for a company once considered one of the most stable fintech names on Wall Street. So what exactly went wrong, and why do funds like Madison still hold on? Even with all the price volatility, Fiserv hasn't fallen off the radar for big money. While it might not appear in the 30 most popular stocks among hedge funds, it's still showing some impressive accumulation trends. According to recent filings, 94 hedge fund portfolios held positions in Fiserv by the end of the second quarter of 2025. That's a significant jump from just 72 portfolios in the previous quarter. This means that while retail investors may be cautious, institutional investors are quietly increasing their exposure. And that's often an early signal that confidence is returning, or that they see something others don't. Still, not every analyst is betting on fintech right now. Some are shifting their focus toward AI-driven stocks, which they believe have greater short-term upside and lower downside risk, especially given the ongoing Trump-era tariff impacts and the onshoring trend that's bringing more tech manufacturing and innovation back to U.S. soil. But Fiserv, being at the intersection of finance and technology, might actually benefit from both trends. And we'll talk about why in just a moment. In another investment commentary, the London company's large cap strategy also shared its perspective on Fiserv. They pointed out that while short-term market reactions may be negative, the company's underlying fundamentals remain strong, and its focus on long-term operational strategy could pay off significantly as digital payment systems continue to expand. Now, if you want to see what other funds are saying, you can explore various Q3 2025 investor letters. And you'll notice Fiserv appearing quite frequently in discussions about fintech resilience and innovation-led growth. Interestingly, some analysts are calling Fiserv one of the best stocks to buy for high returns heading into 2026. And that's largely because of its latest quarterly results, which show that the company is still generating consistent growth, even in a challenging economic environment. On October 29, 2025, Fiserv released its fiscal third quarter results, and here's what we learned. GAAP revenue grew by 1% year over year, reaching $5.26 billion. GAAP earnings per share, EPS, jumped by a massive 49%, hitting $1.46 per share. That's not a small achievement, especially for a company navigating slower consumer spending, rising costs, and competitive fintech pressure. According to management, the main driver behind revenue growth was a 5% increase in merchant solutions, which was partly offset by a 3% decline in financial solutions. So even though one division slowed down, another one picked up the slack, which shows that Fiserv's diversified model continues to provide balance and stability across different market segments. But perhaps the most exciting part of the report wasn't just the earnings. It was the announcement of the Fiserv Action Plan. This strategic roadmap focuses on 5 core pillars that will define how the company grows and operates in the coming years. Expanding average revenue per client, Fiserv plans to increase its profitability not just by adding new clients, but by delivering more services to each existing one. Building a leading small business operating platform through Clover, their flagship merchant platform that's already gaining traction. Creating innovative platforms across finance and commerce, with deeper AI and digital integrations. driving operational excellence through artificial intelligence, optimizing processes, reducing costs, and improving transaction efficiency, maintaining disciplined long-term capital allocation, meaning smarter spending, fewer unnecessary acquisitions, and more focused investments. Together, these pillars form the foundation of Fiserv's future. Management believes that by aligning its teams and technologies under one clear vision, the company can rebuild investor confidence and deliver sustainable growth heading into 2026. Following the Q3 results, Fiserv made a notable change to its full-year guidance. The company now expects organic revenue growth of 3.5% to 4%, compared to its previous forecast of 10%. Now, that may sound like a downgrade, and yes, it shows management is being realistic about near-term market challenges. But it's also a sign of transparency. Instead of overpromising, Fiserv is focusing on achievable, sustainable goals. After the results, BTIG analyst Andrew Hart reiterated his buy rating on Fiserv with a price target of $180. That's nearly 3 times the current trading price, suggesting strong conviction in a rebound. Fiserv isn't just another payments company. It's a comprehensive fintech infrastructure provider that connects businesses, banks, and consumers globally. Its operations are divided mainly into 2 segments. Merchant Solutions, which focuses on enabling businesses to accept and process payments easily, both online and offline. Financial Solutions, which provides banking technology, core systems, and digital payment infrastructure for financial institutions. This combination allows Fiserv to benefit from multiple revenue streams, whether the economy is being driven by consumer spending, small business growth, or digital banking transformation. In essence, Fiserv is deeply embedded in the digital economy's backbone. And while many analysts are currently obsessed with AI or semiconductor stocks, Fiserv's advantage lies in its steady profitability, recurring revenues, and long-term client relationships. Now, let's talk about AI, because Fiserv isn't ignoring it either. Artificial intelligence is becoming the heart of financial operations, from fraud detection to payment routing and customer insights. Fiserv's integration of AI into its operations is already helping the company automate workflows, cut down processing time, and enhance security. In fact, AI is a key pillar in its One Fiserv strategy, aimed at improving operational excellence. The company isn't chasing hype. It's quietly embedding AI where it matters most, in transaction analysis, merchant risk management, and customer experience. And that's what makes it different from speculative AI plays. Fiserv's AI usage is grounded in real, revenue-generating business models. Investment research firm TD Cowen recently released a note expressing renewed confidence in Fiserv's medium-term outlook. The analysts highlighted 3 key strengths: a broad and integrated product portfolio, spanning across payments, banking, and digital services; ongoing innovation, particularly through its Clover platform and global merchant network; strong synergy between financial services and merchant solutions, which allows Fiserv to cross-sell and scale efficiently. TD Cowen specifically mentioned the ingredients that support continued Clover momentum and an acceleration in financial services. That's analysts speak for. This company's engine is running, and it might pick up speed soon. Now let's zoom out for a moment. Fiserv operates in over 100 countries, serving clients in banking, retail, and digital commerce. Its technology underpins everything from credit card processing to mobile payments, bill payments, and even point-of-sale systems. It's the kind of company most consumers interact with daily, without even realizing it. Every time you tap your card at a terminal, use a digital wallet, or make an online transaction, there's a good chance Fiserv's technology is behind the scenes making it happen. So even though its stock has struggled, the underlying demand for what it does hasn't gone anywhere. So what's the final takeaway here? Fiserv, Inc. may have faced one of its toughest years in the market, with sharp price declines and lowered growth forecasts. But under the surface, this is still a powerful fintech company that's adapting, innovating, and positioning itself for a comeback. Between its One Fiserv initiative, its AI-driven efficiency focus, and a growing Clover platform, the company is laying the groundwork for a strong 2026 recovery. Hedge funds are increasing their positions, analysts are keeping buy ratings, and the fundamentals remain solid. The question now is, will retail investors recognize the value before the next big move happens? And that wraps up today's breakdown of Fiserv, Inc., NYSE FI. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and hit the bell so you don't miss any updates. See you in the next video.